It used to be that you could be able to compartmentalize your life and have a work person and a home person. But increasingly, I think for us to really be able to show up as compelling leaders, we need to be our whole selves.
Aneri Jambusaria is shaping the future of wealth management and advisory services right as the greatest wealth transfer in history unfolds. As Group Managing Director and Chief Wealth Officer for LPL Financial, she sits in an executive seat of a fast-growing firm with nearly 29,000 financial advisors who are responsible for $1.7 trillion in assets. LPL, the nation's largest independent broker-dealer, ranks number 340 on this year's Fortune 500. Aneri has built her career across consulting, investing strategy, and now wealth management. And she points to a key perspective shift from a scarcity mindset to an abundance mindset as central to her growth. Hi, I'm Ruth Umo, editor at Fortune, and this is Next to Lead, our weekly series about the new generation of C-suite talent. In each episode, we will speak with today's most promising leaders who are shaping the future of business and who, quite frankly, have CEO bona fides. How do they get where they are? What drives their vision for the future? How do they turn setbacks into comebacks? We will dig into their career journeys, talk about their big wins, and explore the lessons they've learned along the way.
To nurture what's next? Reimagine industries. To turn bold ambition into the beginning of everything. What's your next brilliant move? McKinsey & Company.
And now, here's Aneri. Aneri Jambusaria, thank you so much for joining us for Fortune Next to Lead podcast. We are delighted to have you here with us.
Thanks. Great to be here.
Absolutely. All right. Well, you are the Group Managing Director of Wealth Management at LPL Financial. That is number 340 on our most recent Fortune 500 list. I want to kick things off by discussing your career, your leadership journey. You joined LPL in 2020 from Fidelity. What was your initial directive at the time, and how has your focus area evolved since then?
I've been in wealth management really for my entire career. It's a passion of mine. Ever since I was a kid growing up to immigrant parents, I saw an opportunity to create additional financial security, especially amongst different communities that might not otherwise be served by the traditional financial system. So, I spent a couple of decades now in the industry. More recently, I was at Fidelity Investments before I joined LPL back in 2020. And really, if I take a step back and think about it, the wealth management landscape is really a more interesting opportunity area than ever before, right? For both new people looking to enter wealth management as well as for consumers, there's more support available for you than ever before. There's firms like Fidelity Investments, right, and other brokerage firms as well as banks that offer wealth management services. I decided in 2020 to join a firm called LPL Financial that's actually got a different model within wealth management. So unlike some of the Wall Street names, LPL Financial is actually close to your home. In fact, if you're listening to this podcast, chances are that you've got an LPL Financial advisor in your neighborhood. You don't see a big building with LPL emblazoned on the name. You see, Ruth Wealth Management, right? Or kind of whoever the local person is in your town. LPL, we're a platform. So we stand behind independent financial advisors, over 30,000 of them across the country. And we're entrusted with the life savings of over 7 million Americans, is close to $2 trillion in assets. So my decision to come from Fidelity to LPL was really about wanting to serve the independent advisor. I truly believe that independent advice is the type of quality advice that really makes an impact on consumers and their ability to be able to achieve their goals. When I joined LPL in 2020, I was focused initially on corporate strategy. So I worked with our CEO and our board at the time on long-term strategic direction. Having come from the industry, I knew the landscape really well, but it was a great learning opportunity for me to get to know specifically an independent firm and how it operated, as well as it was my first real foray into engaging with a board at a public company and just understanding those dynamics and how that plays out. After that, I got a totally different type of assignment. I was asked to grow a nascent suite of new solutions that we had designed for our independent advisors called our business solutions. And that was a cool opportunity for me to do something maybe a little bit entrepreneurial and get some more operating experience. We were able to grow this business to serve close to 5,000 independent advisors and provide additional support for their back office and their administration of their offices. And then a couple of years ago, I got the opportunity to expand my mandate back in the wealth management space, which is really where I spent more of my career. And that's what I've been doing ever since. So, in my role, I'm responsible now for think about any of the advice that touches one of our LPL advisors and their end client. I'm responsible for helping to make sure that that advice is the best that it could possibly be. So that includes overseeing our suite of investment solutions, all of our trading and tax management solutions, all of our wealth planning offerings, and helping advisors to engage with their end clients on setting up a long-term plan and then driving for that long-term plan and their long-term legacy. And then lastly, a new set of banking and lending solutions that we're currently rolling out for our advisors and their clients.
You said that this is a really interesting time to be in wealth management. Why the term, why interesting? What is unique about this moment in time?
Yeah. So if I take a step back, wealth management historically has been an area that was reserved for the ultra wealthy, kind of those high end business owners of having additional ways that you could then kind of grow your assets over time. Of course, with the 401k evolution in the 70s and 80s, all of a sudden now everyday people, we're now all responsible for our long term well being and our own financial security. And that really created an opportunity for more and more Americans to create wealth. And so that is a really great tailwind. And today, we see really great broader forces. There's a greater demand for advice than there is supply of advisors. The demand for advice has never been stronger. And in fact, there's a really high willingness to pay for advice amongst consumers as well. And so that's changed a lot over the last several years. So looking ahead, I see a lot of opportunity in wealth management, both for consumers that are looking to grow their wealth and achieve financial security. There's more options than ever before, and you can be really deeply engaged, and it's become a lot more accessible than it was a couple of decades ago. And then vice versa, I think for advisors and folks that are looking to get into the industry, it's an amazing career path and one that has a lot of upside.
I'm going to dig in a bit more into the actual business that is wealth management and certainly how you're spearheading it from a strategic standpoint at LPL Financial. Before I do, though, I want to get a little bit more granular when it comes to your leadership journey. I mean, as you look back, I'm curious what were the pivotal moments or risks that you took that accelerated your career growth that were really catalytic to, entering the C-suite at this Fortune 500 company?
When I look back, I think there's kind of two big things that have evolved that have created opportunities for me from a career perspective. One was a mindset shift, and one was maybe like a risk appetite shift. So the mindset shift is really, moving from having a scarcity mindset to an abundance mindset. This is something that candidly I didn't know about myself until early in my career. I took a 360 feedback survey and I learned a lot about how I was being perceived by others. And I saw that there were times when I was holding back, when I was trying to protect a sure thing versus going after something potentially even bigger and more impactful. And as a result, I wasn't always being my authentic self.
Give me a for instance in that regard.
Not really delegating work that I should do. I should delegate because I was so worried that, like, what if I didn't have command over the thing that, that I need to have a perspective on. And part of that, again, was like not really having maybe confidence in my ability to judge others and to be able to prepare and test others for taking on additional responsibility. So that was one thing that I'd say for me, it was just a matter of looking into a mirror for me to realize that I needed to take a different approach to the way that I approached work and that I approached working with others. And then the other thing was around just a broader appetite for seeking risk. And for this, I give a lot of credit to my partner. He saw me get opportunities, career opportunities that, my initial inclination was to shy away from. And he's really someone who pushed me towards seeking and taking the opportunities and taking a risk. I feel really lucky to have someone like that in my life, who has, in a couple of really pivotal moments, really supported me and encouraged me to take on career risks. And I think the combination of those two, the mindset shift and being pushed to take career risks, have really worked out for me. And I'm really grateful to have that support in my life.
As you look at your professional journey, I think this is a perfect segue. Were there any early career roles that really helped you to develop and certainly to flex your leadership muscle?
Probably the most formative role that I had was helping to build out Fidelity's wealth management offerings. And, at the time, one of the things that I realized is that influencing was going to be a really important part of how I operated as a leader long term. And by this point, I was pretty committed to being in the wealth management space, to really demonstrating a capability in this area of advice. And I decided to do something that is pretty non-traditional, I'd say, for individuals who aren't directly serving clients. I decided to get my certified financial planner certification. So it was, a year plus in education and training. And in hindsight, it's one of the best things that I've done in my career because it gave me a great knowledge set, first of all, around what great advice looks like. And then separately, it also gave me the opportunity to influence and to be able to lead in a different way as a practitioner and as somebody who has more of an appreciation for what it's like to actually deliver advice. So that's something that I'd say is, again, it's not quite a role, but it's an opportunity that I took in my career that was really pivotal for me in terms of my progression.
Was the C-suite something that you were aiming for, you were gunning for, and what are the aspirations beyond your current role as Chief Wealth Officer?
I would be lying to you if I said 20 years ago, I thought that I would be in the C suite or that was something that I was necessarily aiming towards. It was not. I was really focused on just being able to make an impact, do something that had purpose and that I felt fulfilled in. I certainly always wanted to get to a senior level of a company. That's always how I envisioned myself. It's funny. I'm the kid where, like, in third grade, when it was career day, I drew a picture of myself in a suit. So, like, there's parts of this that were known from the beginning. But that being said, again, I'd say there probably were certain limitations for me in my mindset earlier in my career that probably prevented me from really living into that aspiration as fully. And honestly, in hindsight too, I'm grateful. I've done every job out there. I've gotten lunch for my team. I refilled the copy machine. Like, I've been able to really embrace what it's like to do a lot of the different jobs that we had. I think it's given me really great perspective. Look, I'm thrilled to be able to continue to grow my career. I certainly hope to continue to do so at LPL. And, I think for me, part of what I'm looking to do is just continue to make an impact and to be able to serve our advisors and our clients in a way that really delivers on their long-term goals. And again, I feel so privileged to be able to be a part of wealth management at this moment right now, where there is so much changing, so much opportunity, and so much potential to really help people to achieve their goals. It's really special.
Our next to lead audience, these are ambitious executives who are seeking insight, especially seeking insight about what it means to be a 21st century modern leader. What advice would you give to your 30-year-old self or even any ambitious executive about, leadership, about obtaining the leadership role, and more importantly, do it in a way that is still truly authentic to you?
Yeah. Well, I think that word authenticity is really critical. I think more than ever, bringing your whole self to work is essential to how we show up as leaders. It used to be that you could be able to compartmentalize your life and have a work person and a home person. And of course, I believe that some separation is really healthy. But increasingly, I think for us to really be able to show up as compelling leaders, we need to be our whole selves. And that includes demonstrating our personal interests, our personal lives, being honest when things don't go as planned, taking accountability when that happens, and indicating changes that you're going to make because of it. I think all of those pieces really fit together. You can't have one without the other. So as I look ahead, I mean, those were the traits that I see as really important as next gen leaders, which again, I feel like is a change, right? To be that transparent about, when you get things wrong and when things don't go according to plan, I think is really important.
Yeah. As I said at the top of this conversation, LPL, it's a massive firm. As I said already, it's number 340 in our eponymous Fortune 500 list. These are the largest companies by revenue within the United States. But when you think about LPL Financial, it's not a brand name in the same way that a Merrill Lynch is or that a Morgan Stanley is. How do you set yourselves apart? How do you build a brand around the company, especially when it comes to wealth management?
Yeah, it's a great question. And look, this is an area where we've evolved as a firm. When I joined back in 2020, we intentionally didn't want to have our brand be out there because we wanted to support our advisors and their brands. Again, most of our advisors have their own brands that are kind of known in their communities that they want to do business as. And again, we want to support them and their model wholly. The thing that's evolved for us that we've learned in the last several years is that, especially to serve some of those high net worth and ultra high net worth clients, they want to feel confident that their money is in a really safe spot, right? So in addition to having an advisor who they connect with, who they feel can help them towards their goals, they want to make sure the institution that that advisor affiliates with is a capable institution to meet their needs. And so, part of this for us is additional visibility. So we now have a brand campaign out there starring Anna Kendrick. So just looking to create some more visibility and awareness of who LPL Financial is. And then in addition, part of this is us continuing to build out the very best capability so that we can say that we are toe to toe with some of those Wall Street brands that you mentioned. And so I think it's going to be both of those things happening at the same time, and both areas of significant investment for us.
Yeah, it's interesting you say that, what's front of mind is building out some of these capabilities. What does winning look like to you? What are your success metrics? Let's say the next 5 years.
First and foremost, we're looking to just expand adoption of all of our solutions and our advice offerings. And so that means more advisors coming to LPL, choosing to affiliate with LPL, and those advisors continuing to add new clients and deepen relationships with those clients, right? And so that looks like more assets coming in the door, and it also looks like more solutions being adopted over time. And then, of course, we also want to make sure that those relationships are as sticky as possible with those advisors. So we're also looking to make sure that when an advisor gets a new client, they're able to retain that client. And a big part of that we see is the more solutions that you're using, the better the likelihood it is that that client and that advisor are going to continue to maintain a relationship. So those are some of the areas that we're focused on, is just driving broader adoption and penetration as well as the overall experience.
Yeah. You have roughly 28,000, if not more, advisors. They're presumably geographically dispersed at that. How do you align all of these stakeholders around a shared mission, around a shared business goal and outcome?
So I will say, first of all, the starting point is one where it's actually incredibly easy to align everyone on, which is just this belief in an independent advice being a catalyst for a great consumer outcome. And this is something that I say is a philosophical belief that we have at LPL, and that is embodied by every one of our advisors and institutions that we partner with, and just that belief that an advisor has the ability to be able to define what works for their client, and that we're not going to get in the way of of them making the best possible decisions for them and for their clients. And so that philosophical belief is kind of first and foremost and kind of central to how we align everyone. I think from there, we actually see quite a bit of differences in terms of the business models of some of our advisors, right? So we have some advisors, for example, who would like to be small business owners. So they're 1099 employees of LPL. Others that actually want some help with the office administration because they don't want to have to worry about that. They just want to focus on their clients. And so they are W-2 employees of LPL Financial, right? We have all these different, we call them affiliation models, with different levels of support that they get from LPL. And it really allows advisors and institutions to be able to customize the way that they work with us. And so for us, again, we start with a central premise of being really focused around this concept of independent advice, but then enabling quite a bit of flexibility amongst advisors and institutions in terms of the way that they want to run their businesses. And that balance has been really successful for us, and is a big part of why you've seen us continue to grow the way we have.
Yeah. Well, as I said at the top of this conversation, this is a bit of a pivot. You can't have any conversation or interview today without zeroing in on technology, on automation, on AI. I'm curious where you see yourselves leveraging AI, where you see the biggest competitive shifts in wealth management.
So look, I think with AI, there's probably two discussions. The first is maybe a shorter one on the role of AI in delivering advice. But the second is on the potential impact on wealth management consumers as it relates to AI. So on the former, I think wealth management, we're going to see AI significantly impact the way advice is delivered, just like a lot of other industries, right? I definitely envision AI becoming a big part of making advisors more productive, delivering even more targeted and personalized advice to their clients. I think it won't be unusual for us to see advisor productivity go up, maybe by 50% or more in the coming years because of some of the benefits that AI can deliver. And we're already seeing seeing the early benefits of AI amongst our advisors that are taking advantage of some of the AI capabilities that are available today in wealth management. So, big picture, we still see an opportunity for a human advisor at the center of this. After all, it's your money, it's your life savings, it's your life work. At the end of the day, we believe you're going to want to look someone in the eye and feel confident of where your money is heading. But absolutely, AI is going to result in a dramatic transformation in productivity of advisors and an evolution of the model.
Well, you bring up a great point, and I think it's one that, a lot of C-suite executives are kind of grappling with. Like when I think about, wealth management in particular, or maybe even taking a step back, technology, as you've already alluded to, it can create efficiency, but wealth is really a uniquely human, a trust-based business. And so I'm curious how, you balance some of these machine-led insights with the human touch that clients expect, especially at key life moments.
Yeah. Well, part of what makes us confident in delivering that is we've broken down the day-to-day of an advisor, and so much of that time is actually spent doing administrative tasks, right? Note taking from meetings or rebalancing of portfolios. I mean, tasks that, certainly could be automated. In some cases, you can leverage AI. And you can envision as the technology progresses to leverage that more. I'll give another example. Recently did some continuing education for my financial planning certification. I had ChatGPT on as like my sidekick. ChatGPT is an excellent financial planner academically, right? So like there's a lot of potential for sure in just the nuts of like if there's a provision that you're less familiar with or you're curious if you can apply it to your client, I can certainly envision some of those tools being beneficial to an advisor. But yeah, at the end of the day, especially when it comes to your hard-earned money, I think people are going to continue to want to have a person that they rely on who can be the face of it and somebody who can kind of orchestrate, right? More of these activities. So the job, I think, is going to fundamentally change from being maybe historically being a financial advisor was more of an analyst. I think in the future is going to be maybe more of an orchestrator and a relationship manager. And then I think, look, the other interesting conversation is, what's the potential of AI on a wealth management consumer? Because I think similar to how AI is transforming wealth management, it's transforming a lot of different professions. And, we don't know how all this is going to evolve, but we do know based on prior technological transformations that there's typically some disruption that happens in employment, right? So maybe people's jobs change or, folks end up focusing on different areas of their role. And, I think especially at this stage in our economy, I think some of that disruption is going to be challenging for consumers. So the big thing that we're thinking about too is around how do we make sure that consumers are working with an advisor to really make sure they're well positioned for long-term success, especially with some of the potential disruption in AI. And so what that looks like is, first of all, making sure you have a really great financial plan set into place. You have a perspective on, maybe some supplementary income sources. If, let's say, that your paycheck were to be reduced or go away, what are some other ways that you could leverage your investment capital instead of your human capital to be able to support your family? I think those are all the types of conversations that, everyone, myself included, I think deserve to be having right now. And I think financial advisors are really well positioned to be able to engage on subjects like this.
I'm curious how you see AI transforming your particular role as Chief Wealth Management Officer. Do you see yourself as part technologist, part strategist? Or what's that evolution looks like?
Yeah, absolutely. So I think, look, there's always going to be a need for someone like me to have some acumen, right? Some perspective on what great advice looks like and continuing to drive for new solutions, new offerings to help advisors to be able to engage with consumers that way. But increasingly, those investment solutions are going to have a technological aspect to it, right? There's going to be some digital way in which consumers are engaging, whether it's investment products, tokenization of securities, whether it's kind of automated rebalancing tools and tax management and things like that. These are all increasingly have a technological bent to it. So certainly it requires not just having the acumen of wealth management, but also appreciating how technology can actually enable those outcomes at scale. And that's part of what I think is going to make wealth managers really successful in the future. It's, yes, of course, delivering those really great outcomes we talked about, that outperformance, that, that's strong, those strong returns, but then being able to do that consistently at scale in a really personalized way, that's really where we're going to see technology continue to play a big role in making wealth managers even more effective.
Let's pivot and talk clients and generational shifts. Millennials, Gen Z, they're up and comers, they're working, a lot of high net worth individuals, certainly. What are the biggest differences you see between today's high net worth client and maybe the ones you were serving 5 years ago, 10 years ago, certainly in terms of how they're investing, risk appetite? Kind of give us an overview of how that's evolved over the years.
Yeah, so look, big picture, we see more high net worth investors than ever before. There's been a lot of growth in this segment, and that's kind of across the board from what we call the millionaires next door. So think up to 5 million in investable assets, then the high net worth segment, which we think of as having $5 to $30 million to invest, and then the ultra high net worth segment, which is of course above that. So there's many more than we had previously. And because of that, many of them, were accustomed to a certain flavor of wealth management that's different, right? So they're used to having digital engagement as it relates to how they give and receive wealth. They're used to having integration of banking and lending alongside their investment solutions. And so those, I think, continue to be an area of focus for us to continue to enhance in our offering for high net worth clients. I think another area of focus is, of course, on the estate planning side. We just had some recent legislation changes with the One Big Beautiful Bill Act. I should know the technical name for it. The recent tax legislation in Washington, how about I put it that way, created some clarity for high net worth investors in terms of long-term estate planning implications. So certainly a lot of opportunity there to help high net worth investors to be able to be protected in the long term. And then lastly, just, from an investments perspective, continue to see growth in exposure to alternative investments. And there's a couple of reasons why we see this happening. One is just from a returns perspective. There is more and more of our equity markets are concentrated in just a few names. And with kind of the overall inflation and interest rate picture being where it is, investors are looking in different areas for additional return as well as to manage volatility. And that's really where alternative investments have proven to be beneficial. And we see it being beneficial really all across the wealth spectrum, but specifically amongst high net worth investors. In fact, our LPL research team, they're thinking about moving from a traditional, we call it the 60-40 portfolio of 60% of your assets in equities and 40% in bonds, to a 30-40-30 portfolio, where that last 30% is in alternative investments. And so it's a pretty sizable shift in overall asset allocation away from traditional equities and fixed income towards more of that alternative investment exposure.
Certainly. And relatedly, a big topic of conversation at Fortune, but I think across any, business publication, is what we're seeing now, which is I'm sure we're in the midst of the largest wealth transfer in history. Millennials and Gen Z will soon hold the majority of investable assets. I'm curious how younger investors or inheritors of wealth are kind of changing the dynamic and the conversations that you're having. What is their approach to wealth?
Yeah. Well, so we're actually seeing the generational wealth transfer happen in two sections. The first transfer is actually typically happening to a surviving spouse. So oftentimes what happens is one spouse passes away, the wealth transfers to the other spouse. And demographics being what they are, it's oftentimes to a woman, an older woman who inherits the wealth. And sometimes they're around for 10, 20, maybe more years than that before the wealth transfers again to the younger generations. And what's interesting is, and even in that first transformation, you do see different preferences in terms of how they want to manage wealth. I mean, we all have heard the stories of the woman who wasn't really included in conversations with their advisor. And then when she takes over the wealth, decides to go in a different direction and work with someone different. Oftentimes women, will have different priorities. Maybe it's charitable giving. Maybe it's thinking through the legacy planning a little bit differently. And so I think it's really important to have a perspective on this kind of surviving spouse client and really adjusting what we're delivering in wealth management to be able to serve their needs. In many cases, too, the surviving spouse is being mindful of the next generation, right? They're thinking about, okay, at some point my son or my daughter is going to take over this wealth, and how do I make sure they're set up for success and that this is something where they feel confident in being engaged. And so oftentimes with the surviving spouse involved, they'll want the next generation to be engaged in financial planning discussions more so than sometimes the previous family dynamic. So definitely I think we're seeing those family dynamics change as the generational wealth transfer happens. I think, look, longer term, as Gen Z and millennials do inherit more of that wealth, it'll probably be a decade or two before all of that shakes out. I definitely think, there's a need for us from a wealth management perspective to have a really high level of digital engagement that we enable through our offerings, as well as just, having a broader way to personalize. Increasingly, millennials and Gen Z are used to being able to have their investments live out their personal preferences and reflect kind of their personal life. And so I think it's imperative for us to make sure that we're building wealth solutions that allow them to do that.
When you were talking about those who inherit wealth, you said that, it's often women, at least you're kind of bifurcating it, but you said you often see the inheritance going to women. Is it simply because women live longer than men? Or is it because, men have long been the arbiters of finances, and have, for traditionally been the breadwinners in the family? What's kind of the duality there?
Yeah, so I think both are applicable. So one is just pure demographics, right? Of women live longer than men, and so oftentimes when you have a married couple, if they're, again, being a typical partner of a woman and a man, oftentimes it's the man who passes away and the woman who inherits. And we're seeing this play out. When we look at our own data at LPL, we see this playing out firsthand as well. But then exactly, I think Ruth, you're spot on. In addition to that, you know, the legacy approach was to have, the male oftentimes engage with the advisor on financial matters. And so you have this dual whammy where it's for the advisor, your primary relationship contact person is unfortunately passing away. And so you better make sure that you have a relationship with the surviving spouse and a really good relationship with the surviving spouse, and maybe a relationship of them independent of the other spouse. And so we're seeing some of our advisors doing really cool strategies around just making sure they're building a relationship with all key decision makers within a wealth relationship, and really having individualized attention to each of them. And sometimes, by the way, they have different things that they're looking for, that they're looking to solve for. But really addressing that head on while they're able to kind of bring their wishes to life when they're together, versus after one of them passes away, and then you end up making it a drastic decision because of it.
Has the age demographic for your clients, has it dipped down? I'm thinking about the money that's come in through tech. I mean, the Journal did a piece just the other day where they were looking at all the 20-somethings who are AI and tech natives, and they're making a lot of money. Are you finding that the age demographic has dipped down considerably for high net worth individuals, just given the influx of tech and AI related, salaries and money that's coming in through those sectors?
Yeah, we're definitely seeing growth in the high net worth space, specifically driven by growth in the tech sector. And in addition, we're also seeing advisors who specialize on those types of professionals and all of the related considerations, including things like stock options. And, increasingly, they've got preference for making private investments to support kind of startups of their own choosing. And so there's a number of different solutions that, we're building that will cater specifically to that demographic.
Let's end with this question. I mean, as you look to the future, what's a trend in tech, a trend in consumer behavior, a macroeconomic trend that you think will materially reshape wealth management in the next 5 to 10 years?
It is challenging to pick one, but if I had to pick one, it is this convergence of your spending with your investments. Historically, we've had this mental model of separating those into two buckets of you've got your day-to-day spending money over here, and you've got your kind of money for long-term investments over here. And as a profession, by the way, like, we encourage that, right? We created these kind of bifurcations. I think the reality of how people live, especially as you think about the next gen, those concepts really don't make sense to be bifurcated anymore. And in fact, the advice that you're getting from your financial advisor should span across both. And so that's, I think, going to be a big change that we see, is this convergence of banking with investments and wealth and retirement all coming together, and having a financial quarterback who will kind of drive that on your behalf and helping to look at both the near and long term for you. We've got a lot of work to do to get there, but it's so clear that between like changes in technology, changes in the workforce, the generational wealth transfer, the competitive landscape, all these things are going to come together, and consumers demand that kind of single overarching financial quarterback.
Can you share with us a recent book you read that you found to be thought-provoking, life-changing, inspiring?
Oh man. I just finished a book. I'd say it's more of a cautionary tale. I read The Glass Hotel by Emily St. John Mandel. Have you heard of this book?
I have not.
It is a fictionalized version of what happens when a Ponzi scheme unravels, and it's loosely based on the Bernie Madoff scandal of 2008. And look, working in wealth management, you know, as if you can't tell from like the hour we spent together, there's so many of us who have nothing but the best of intentions and truly care about the well-being of our clients. But there's always some bad eggs, right? And unfortunately, I think for wealth management, some of the bad eggs have tarnished the overall perception of the industry. And it was really impactful for me as to just hear more about these characters. Again, it's fiction, right? So it was a beach read for me last week, but it was so telling just to see how this advisor had impacted these people and their lives, and what it meant to all of a sudden have lost your entire life savings. It's so traumatic, right? And for me, it really reinforced just the importance of what it is that we do, and why it is important for investors to have access to competent, ethical financial advice, because it's the representation of your life's work, and it's unfortunately really tragic when that's taken away from you.
Absolutely, I can only imagine. And now I have a book to put on my to-read list, so thank you selfishly for that one.
It's a good one.
Thank you, Aneri, so much for your time. This has been a great conversation, and more to come soon.
Thank you, Ruth. Nice to meet you.